Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back, KS family. Let's run the numbers. Bitcoin currently down 0.36% to 38,976. Ethereum down 0.31% to 2575. Today is going to be a little bit different. I want to look at XRP. XRP has been in the news recently, and Jeremy Hogan has been doing just a fantastic job of dissecting the legal aspects of the XRP Ripple case. What I'm interested in sharing with you is how far can XRP go if it actually maintains positive momentum. Where would good sell levels be, good buy levels and good sell levels, and what sort of percentages could we anticipate? The first thing we do is that we need to understand what Bitcoin is doing before we go into XRP. But why is that? It's because of Rule 45. No alt can escape Bitcoin's gravity. As Bitcoin goes, so too does the entire crypto market. And the one thing that we can see here, the number of shorts entering the market just of late has been really quite extreme. What's really interesting about the number of shorts entering the market, generally when we see the shorts spiking up, we typically get a sell down. We're not getting this at the moment, which is really interesting. We're just going flat. The shorts are actually being defeated at the moment, which is quite weird because there's been virtually no liquidations. We're always aware of weekend price action, but under $50 million in liquidations and under $20,000 positions being liquidated is really, really low. We're talking Christmas Day low. We can see over the past 24 hours, a little over 60% of liquidations were long. And when we actually look at the number of liquidations and compare that backwards, it's really very, very light. So what does this actually mean? It means that people aren't selling. They just don't want to sell. They can see the shorts entering the market. They can see so many news events around the world pointing to all sorts of problems with inflation, with oil, gold spiking, the US dollar, the DXY, increasing. But crypto holders are saying, yeah, I don't care. I'm not selling. We of course always need to make in advance probabilistic choices. Always know what you will do if price goes up, goes down, or goes sideways. And don't be academic about it. Have a strategy in play. That's what professionals do. We need to gain an understanding as to what is happening with Bitcoin. There's an undeniable correlation between what Bitcoin does and what the entire crypto market does. If we see Bitcoin selling down, the entire crypto market will sell down. But if we see Bitcoin going up, the entire crypto market will go up as well. This is really, really important to understand. And I'll come to a few things that Jeremy Hogan talked about with the XRP case as well. Just to give you a few quick updates, SEC Ripple case delivers a XRP boost. And it does, and for good reason actually. XRP price surge as investors turn bullish on potential SEC versus Ripple settlement. XRP soars more than 15% as Ripple wins fair notice defense. But what is next? Xrp Lawsuit. Ripple's upcoming court decision might be revealed as soon as the end of March. Let's have a look at this and let's dive in a little bit more deeply. As crypto technical analysts, the first thing we do is we want to look at the chart. Now, I want to show you something here. This is really quite important. In December, towards the end of December, basically the SEC came after Ripple and said, hey, guess what, Ripple? You've actually raised money illegally and we're going to sue you. XRP is a security and you didn't register with us. So therefore, we're coming after you. And what happened from the high point here on around the 24th of November, going down to the lowest point where price bottomed out for XRP, it actually fell 77.77%. This is actually really important to understand. If the SEC wins the case against Ripple and deems that XRP is a security, it will actually start to go after other cryptos. And we don't want a situation where your beloved alt falls 80% because the SEC wants a cut. We don't want to see that. We want to see the SEC lose. Sorry, Gary. It's a definite fact that crypto Twitter has a kind of interesting relationship with Gary Gensler, for sure. We can think of XRP or Ripple being down here. Gary says, "Time to get protected. Daddy, no!" I've mentioned this quite a few times, that it's really important for Ripple to win, and it looks like it may well win, and that's fantastic news. But with any legal proceeding, we just have to take our time with things. And when we look at what the SEC has done with Ripple, it's quite a mountain of paperwork that they've buried them under. It all started at December 22nd, 2020, when the SEC filed against Ripple for them raising over $1.3 billion for unregistered securities, or so the SEC said. The SEC's focus was that Christian Larson and Bradley Garlinghouse basically failed the Howey test, and they were offering unregistered securities through Ripple. The SEC basically said, "Hey guys, you've broken the law, and we want to stop you doing it, and we want to fine you, and we want to do all sorts of things to protect the crypto community." What followed was so many bites of the cherry. SEC went after Ripple with everything they had, but Ripple, as you can see, has been doing an incredible job of defending themselves. Recently, can you imagine being a lawyer and having to read all of this? Wow. Jeremy Hogan has done just such a fantastic job with his wife about actually analyzing the XRP implications for the Ripple court case. He's just a very funny guy. When we look as a crypto technical analyst to actually understand price behavior, we can't just play inside the chart. That is very amateurish and very novice. We don't do that. But I can tell you a lot of people do. And we call those people retail investors and traders. Smart money investors and traders. And we know all investors become traders anytime they buy or sell. They look outside the chart. What's actually influencing price action? That's very, very important to do. One important thing to understand is how Bitcoin's gravity will impact your beloved alts and all alts, and of course XRP. XRP comes up when Bitcoin comes up. It has what is called directional correlation. It goes down when XRP goes down when Bitcoin goes down, but it doesn't necessarily mean that it has to follow the exact same path. What you always get is a percentage distortion, either to the upside or to the downside. You can see, for example, as Bitcoin was selling off here, what actually happened was that XRP was also selling off, but to a much lower percentage variation. And when it just kind of dog-legged a little bit sideways, this was sufficient enough for XRP to go up. But no alt can escape Bitcoin's gravity. As Bitcoin came down, what do we see happen? XRP came down. XRP's price is primarily dependent on Bitcoin. We'll come back to this later, but it's a very, very important factor to understand. And you can see it play out here on the chart. As Bitcoin came down, what did XRP do? It came down. When Bitcoin came up, what did XRP do? It came up. When Bitcoin came down, what did XRP do? It came down. And so on and so forth. This is the way. Unfortunately, a lot of statisticians and mathematicians and economists do not understand the relationship between Bitcoin and a particular crypto. If we go all the way back to May of 2018, we can see Bitcoin's price action, Bitcoin's gravity in the blue. And what we can see is an over and under exaggeration through the alt. But you can also see that XRP is following Bitcoin's gravity, sometimes almost to a ping. This is really, really vital to understand. If you understand this particular factor, it's actually literally a game changer. And hopefully the lawyers for XRP are watching this particular video, because it's going to become important for a way to actually overturn some expert witness testimony. The bottom line with the SEC coming after Ripple, or pretty much XRP, and wanting it to be a security, is that the SEC says it passes the Howey test. And the Howey test is basically this: there must be an investment contract for the Securities Act to get triggered. That means there must be an investment of money in a common enterprise or a business. Now, this part is absolutely critical to understand. Profits to come solely from the efforts of others. Notice the word solely. So many times I look around the news and the media, they actually delete the name, the word solely, and say profits to come from the efforts of others. Profits to come 100%, which is solely from the efforts of others, or 50% or 10% or 1% from the effort of others, is a huge difference in the eyes of the law. In fact, it's unbelievably different, and people tend to leave out words, and when they do so, they actually mislead people. That's why you will always see that I go straight to the heart of everything. I want to look through the actual 1946 judgment of the Howey case. I want to see the exact words used. I want to understand it, and I recommend you do exactly the same thing. And if we want to get really technical, we can go back to the actual scan of the 1946 case, but it's in digital format, so let's keep with that. So going back to the digital format, if the SEC cannot prove an investment contract, and they need all the arms of the Howey test to actually do that, Ripple is off scot-free, and it can launch a counter action against the SEC, which would be really fun to see. What the Securities Exchange Commission wants is that it wants to see a common enterprise, the investment of money, and the expectation of profit solely through the efforts of others. If it doesn't get this, it's not a security. It's either a currency or personal property. The key is solely through the effort of others. This is really coming out in the case now. An expectation of profit. Well, you can think, why would you put money into anything if you don't feel like you're going to get money back? So I think they would get a yes for this one. But if they get a no for solely through the efforts of others, it's not a security. And that's what we want. Because you don't want to see your beloved altcoins tanking 80%. Sorry, Gary, we just don't want that. But the SEC's been so supportive of the crypto industry, and you can see such supportive behavior here with all the lawsuits that it's brought against so many people inside crypto. It just literally goes on forever. And this is only literally up to the Ripple case. We can expect more from the SEC. More court cases, not more reasonable behavior. I'll leave a link in this particular thing, this research report, in the description of this video, as well as a number of other things that I think you'll find really, really interesting. Hopefully it can show you there's a huge amount at stake with XRP and Ripple. It doesn't matter how people feel about XRP. Every single person in the crypto industry should be behind XRP and Ripple at this current time. I know a lot of people get corridored off into camps of support, but this as an industry-wide thing is really important to understand. If your beloved altcoin is not XRP and the Securities Exchange Commission comes after that beloved altcoin, you may see something like this drop occur. We don't want that, so we should really support Ripple and XRP. Jeremy Hogan has done such a fantastic job of analyzing the Ripple Xrp Scc Lawsuit, and he's just a fantastic guy as well. Basically just summarizing what he spoke about in his analytical video. He said that the judge basically said the SEC's fair notice defense was denied. And that's really important, because if it was not denied, it would be a problem for the XRP holders and Ripple, of course. One thing that Jeremy talks about is he says that XRP's price is mainly derived from the price movement in Bitcoin. Absolutely, we have a rule for that. It's Rule 45. No alt, such as XRP, can escape Bitcoin's gravity, and this plays out on the entire crypto market. And if we zoom in to current price action, the blue line is Bitcoin's price action. And the interesting thing here, it's all about gravity. When, for example, Bitcoin goes up in price, we expect 99% of the alts to go up with it. When it comes down in price, we expect 99% of the alts to go with that as well, up or down. And you can see how closely it's actually playing out here. It's all about what's called directional correlation. As Bitcoin moves up, the alts will move up. As Bitcoin goes down or goes flat, the alts will go flat or go down. This is really, really important stuff to understand. What Jeremy Hogan says is the judge has basically looked at it and said, well, XRP is correlating with Bitcoin. And that's despite expert testimony, an expert witness, and I'll go through that expert testimony in a minute. Jeremy's analysis also stated that Ripple has no relationship with the majority of XRP holders. That's incredibly important. As we can see here, if Ripple is not associated, it's not solely through the efforts of Ripple that XRP's price goes up, then it's not a security, and the SEC goal of making XRP a security will fail. In Jeremy Hogan's fantastic video, he talked about at 1329 the expert witnesses' analysis of how basically Ripple was controlling XRP's price. I would urge you to have a look at Jeremy Hogan's work. He's just a fantastic guy. It's so much fun, but really, really knowledgeable as well. When I see something like this, I immediately go digging, and I suggest you do too. What I did is I actually found the source information for this expert witness's testimony, and it's quite a long document, but you will actually see eventually that particular chart that Jeremy was talking about. And the thing to note is when we look at the particular price action of Ripple, this was actually, or XRP, this was happening when the blow off top was happening. This is really, really important to understand. You'll see all sorts of models and all sorts of data. From a statistical perspective, certain econometric models are being applied here. The problem with a lot of econometric models is they tend to have means or averages in them. And when we actually do that with exponential price action, we don't actually get the right conclusions. I'm not saying that this person's analysis was not correct. I'm just saying it applies more to the stock market than it does to the crypto market. And that's because exponential price action is really common in the crypto market, not so common where this particular methodology that this expert witness used. And you can see this table here. Just very simply, what this analysis shows is that the expert witness for the SEC, and Jeremy lays it out so well. What is an expert witness? It's someone paid by one party to discredit the other party, and it happens on both the defense and the prosecution side. That's just normal. What we actually see here when you dig further down, and I read through this document, and it's quite a long document, only a modest 296 pages. Crypto technical analysts already know that this is pretty much Bitcoin's overextended price action, and it's the XRP closing price for the last bull market cycle, and then we came in to the bear market and then into consolidation. It's just following Bitcoin. One thing the expert witness does, he uses a constant mean return model. The problem with averages, when you get into an exponential market such as crypto, averages simply don't work. And coming from a background of lecturing first and second year statistics, I can tell you, when you get exponential price action, averages are just useless. You can literally throw them out the window. When things are incremental, you can actually understand it. But the problem is exponential price action is almost like having one arm in the fire, one arm in the freezer, and saying your average temperature. What actually happens is standard deviations, average measures of variability, are actually formed from formulas involving the average deviation from the mean. And what happens if the mean is not representative? These return models are not representative either. And event study analysis is used a lot in the financial markets. I use them many times. My background is in finance. When it comes to analysis, it always depends what event is analyzed. When we get into the crypto market, the majority of people are really positive. If they see something for a Series A funding, an investment, a deal, a licensing, these things are generally regarded as quite positive. And the issue is with the crypto market, it's always about gaining attention. What we can see here is the SEC wants to say that Ripple materially affects XRP's price, when we can see what's actually happening is it's Bitcoin. Of course, when particular stories are put out, speculators come in and trade news events. That's why often in crypto we'll see a very big spike up or a very big spike down, and that's just basically speculators coming in and out of the market. Let's get into the analysis and say, okay, now we know all the background of these particular price movements and how they're related to Bitcoin. We can actually start saying, what if things turn around? And we're seeing Bitcoin actually come up here. This is pretty good stuff. And if Bitcoin, and we've seen that the shorts have not had that much success pushing Bitcoin's price down below support, which is fantastic for the crypto market. So what happens if we actually see XRP getting above this 82.52 level? It's starting to move into a cradle. It's starting to get above a lot of resistance. And if we zoom in here, we can see that XRP price tried to get above these two resistance levels. And you can just think, resistance is basically like a fence. It fences price in. But you can see these fences are getting higher and higher, and we're getting to a point where we could expect a breakthrough of these upper fences. And then what happens next? What happens next is basically price will try to find the next fence. What typically happens to investors and traders that are new inside the crypto market is they want to buy at one level. They literally want to go all in and more when they hear any form of good news. And we did get some good news, but what actually happens is price is always moving in a wave. It's going up and then down. You can see up and down, up and down, up and down. And it's always trying to find support levels to bounce from, resistance levels to test, and then get above those resistance levels and turn them to support. What I've done for you here is to share some buy levels with you. One is at 78.97. one 73.75, one 67.34, and one at 60.94. Now, what actually occurs if XRP decides to take off? That's where we put in our sell levels, one at 89.26, 99.62, 107.85, one at 126.78, and 155.32. These particular sell levels are resistance levels. What happens when we strike a resistance level? We strike it and get pushed down to a lower support level. This is the way the crypto works. The previous all-time high for XRP was 196.69. Now, one thing that you will notice, I always use all the numbers that actually go into the price. I don't just say 125 or 126. I say 126.78. The reason for that is professionals always use exact precision, and you don't want to hover around whole numbers. For example, a lot of retail investors and traders will put their sell levels in at $1 or whole numbers, 1, 150, 2, for example, $2. We keep under those levels, so that allows us to actually capture a particular level where there could be a lot of sells above it. We're always in the business of actually getting a return. So what do these returns look like? Let's just zoom in a bit. With all things in crypto, you have to find your own way in terms of what percentage you're happy with. But just bear in mind a couple of differences from around the current price to these particular resistance levels. We're looking at about 13% up to the 89.26, about 26.25% up to the nearly, 99.62 level. And we're looking 35.63% to the 107.85, then 59.4, 96.05, and then just under 150% when we get back to taking out that all-time high. The concept is, what if things go horribly wrong? What if things just decay and price comes down? That's exactly what we want as crypto technical analysts. And I can hear you say, Ken, what are you smoking? What do you mean? We don't want price to go down. We want it to go up. We want it to come down when we buy. Have a look. Just play around with this little area for you. I'll zoom in. I'm just going to take you through this 12.96, 26.25, and 35.63. Just say, for example, that we did a fill down here on this 73.75 mark. How would that actually change this 12.96? I'll just give you an approximate idea. If we come down to around that level, it just went up 21.24. What about this 26.25%? Let's just drag that down. It's now become 35%. What about this one? Let's drag this guy down. What's that one becoming? Nearly 46%. Just bear this in mind. What happens if we actually go down another level, down to around this level? It's now become 60%. This is how professionals actually trade within the crypto market. This is now nearly 50%. And what about this? Going from 21 down further. Now it's about 32, nearly 33%, and we haven't gone all the way down. We could go down to this lower buy level, and just coming back up to here is nearly 47%. This is what you always want to keep in mind. We buy, as crypto technical analysts, we buy when it's really, really red, when things are becoming unmaintainable and they're sinking. That's what we love. That's actually what we do. And price action, because price is always moving in a wave, we have the potential to get in and out of positions quite quickly as well. If you'd like to look at yesterday's video, I just put in a little trade that I did. Within about 2.5 days, I made 40%. Now, the 40% is not important. What's important is the annualized return. If you look at an annualized return, for actually small variations, you don't need 40%. You can do it with 5 or 6 or 10. And you can see that we get those variations very, very quickly inside the crypto market. And with the skills and with the knowledge, you can actually make money, and substantially more money than those 10x, 20x's that people talk about by just holding through trading. Trading is a very, very profitable activity, but you have to know what you're doing. So you can actually see we've got 47.94. If we just pull it down to that lower one, we're at about 63 now. And that's still under resistance. These are all wholly and solely possible to do. And that's why if you have the right attitude when it comes to crypto, you're going to do really well. But you need to have the skills. The skills are really very, very, well, they're absolutely critical. They're vital to take you out of zone 1 and zone 2 and to put you into zone 3 and zone 4. Zone 1 and Zone 2, the panic and the blame zone, is when people enter the market. They wouldn't even consider to buy on red. They buy on green. That is already destroying the percentage move in your favor because you're buying as it's going up. You always buy as it's coming down. That is the way. That's what professionals do in Zone 3. Zone 1 and 2 are all about the addiction to certainty, which causes terror. If you're not sure where to buy or where to sell, you're probably in Zone 1 and Zone 2, which can be a horrible, horrible place to be. But please bear in mind that being in those zones means you're closer than you think to Zone 3, because these are the 4 stages that all investors and traders progress through. All traders and investors progress through to become professional. In Zone 3, we make money. We have a 3-way decision process. We understand the role of percentages. We have patience. We have rules, and rules are critical. It takes a long time to get your rules together. And of course, those rules help us to actually identify opportunities and to buy on red. Zone 4 is all about keeping your money and mastering fear and actually having just a beautiful life, one built on a positive excellence life trend with integrity, decency, kindness, strength, and boundaries. These things are really, really important. So what we can see is there's just a bit of background between buying and selling. You have to do a lot of analysis. You must go outside the charts. If you see people just stuck in the charts and they're not going outside the charts, that's a Zone 1 and Zone 2 methodology. Zone 3 always goes outside the charts. And not only does it go outside the charts, it does a lot of research. That's part of the thinking inside Zone 3 and Zone 4, which is really, really different from panic and blame zones. If you would like to know when to buy, when to sell, and how to analyze charts at a professional level, how to sleep more soundly at night, how to get rid of all that crypto stress that's so endemic in the crypto market, you can seek to become a crypto technical analyst. And what I do inside the masterclass is introduce concepts just step by step. You don't have to have any background. It's really vital to understand that if you don't have the knowledge, you will get losses. And if you don't have the right rules, you'll also lose. You don't ever want to go all in or all out. You want to gradually scale in and gradually scale out. That's what I've tried to show you with XRP, what you can do there. And we always start with marking up the charts. And then we mark up the charts in far greater depth and detail than I show on the community channel. Then we go into outside trends. We must understand and collect probabilities. we go then into timing. We get our attitude right and make sure that we have a good relationship with money. So many people have a very, very bad relationship with money. They don't want it. Deep down inside their psyche, they think something is wrong if they become wealthy. That's not true. Your birthright is to become wealthy. There is abundance in this world. But so many people teach us that money is bad, and that can permeate someone's basic thinking and belief system. In the real wealth section, we get rid of that self-sabotaging behavior, and it's endemic across investors and traders. It's probably one of the greatest loss areas, and very, very few people talk about it, which is really tragic. And then we get into the trigger section using actual trades and real data, and we follow them through. No previous knowledge is assumed, and the foundation section is quite onerous. It's onerous because it replaces 300 years of candlestick pattern analysis and just converts it into understanding. But it's also that you actually learn the personality of the cryptos you're analyzing and your beloved alts. It's absolutely vital. And then just go step by step as you go through the lessons. Everything is laid out very, very simply. You just have to have the commitment and persistence. And that's what all of life is about. Without commitment and persistence, you will not succeed in any endeavor. With commitment and persistence, you will succeed absolutely in whatever you turn your focus to. What we do as crypto technical analysts, we just take out limit buy orders at these particular levels and just wait really patiently for price to come to us. We do not chase price. You can participate in certain trades, absolutely, but overall, we do not chase price. We're very, very cool people. We just let price come to us. We don't do any chasing. And always bear in mind that the lower it goes, when it repairs, it actually comes up much faster. Just think about this, 150% from this price up to the previous all-time high. Remember 150. If I go down one buy level, it's just become 167. Down another one, it's become nearly 200. Down one more, it's become 223. Keep this in your mind. This is what professionals do. They realize that when price comes down, especially like this, when we get such long tail rejections, that is the single best time to get into the market. But zone 1 and zone 2 are panicking and fleeing for the exits. Professionals are leaning in and grabbing these opportunities. Please let me know in the comments how you're feeling about XRP. And also, how are you feeling about Bitcoin? Do you think it will hold on to this support level around the 38,249 mark? Or do you think it will go down or go up? Love to hear your thoughts. I hope you found the content useful. Please consider sharing and liking this video and also subscribing to the channel. Thank you very much to our moderators for keeping our community safe from scammers, and the CTKS ambassadors for mentoring masterclass students. And as you can always see, there's always positive momentum inside the crypto market. Opportunities reset daily. And of course, a very big thank you to you for watching and being part of our global KS family. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the CryptoTradingKS Masterclass. Please click the link in the description to get 80% off. I've also included other links from this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.